talk about Dabur. They've been busy announcing the bonus, acquisition plans, and a 19% growth in PAT and revenues as well. The stock didn't react too much. But let's get in touch with the management. Sunil Duggal, Chief Executive Officer of Dabur India, joins us live from Delhi to talk about the numbers and a lot more. Thanks so much for joining, Mr. Duggal. Let's talk about the acquisition that you announced, the Turkey-based Hubei cosmetic for $70 million. So the moot question is, how are you going to fund the acquisition?
The transaction is for the buyout of Hobby Cosmetics and two other companies. And the revenues of Hobby Cosmetics last year were $27 million. This year they would be considerably ahead of that. And the transaction size is $68 odd million. We intend to fund it largely through internal accruals, and we've got a fair amount of cash in our books. And there may be some bridge loan which we will take to meet the residual part.
Right, Mr. Duggal, you spoke about bridge loan. How much of a bridge loan will you take?
There could be in the region of around $50 million at the most, probably a little bit less than that. So we still have to work out the finer details, but financing will not be a problem. As you know that we have almost no debt on our books, so we have a considerable amount of capacity to raise cash through debt.
What does this do to your company, Mr. Duggal, in terms of top line, bottom line, and the overall synergies between the two companies?
I think if you look at the revenue size, they should contribute to approximately 5% to our next year revenues. But I think the importance is much more than in terms of just size. It's strategically very a good investment from our point of view. It gets us entry into this very high growth area of Turkey. Also, we believe that the products suite which they have is very relevant for our MENA markets and perhaps going forward even for India. So it's very complementary, it's very accretive both financially as well as from the point of view of revenue growth. And there's a considerable amount of both revenue and cost synergies which we believe we can derive out of this. So we are very happy with this deal, and we believe it will do good for the company.
Right, Mr. Duggal, while your Q1 numbers did not do too much for the markets in particular, but in terms of expectations of your growth going forward for FY11 and Q2, if you could give us some highlights of that.
Well, we hope so. I think a lot depends upon how the economic growth goes, how the monsoon pans out. But we believe that the demand side will be strong. We also believe that pressure on margins, which were perhaps at the peak in the first quarter, would begin to ebb. And we'll be looking at more friendly margins going forward. So I'm pretty sanguine about the rest of the year. I believe it will be a good year for us.